Welcome to this training on the new tax law provisions you need to know. I'm Jayden Doyé, CPA, and today I'll walk you through the most important tax changes, what changed, what stayed the same, and what you should be paying attention to as you plan for your taxes. My goal is to help you feel informed, confident, and prepared before tax season even starts. Here's what we'll cover in this session. We'll look at updates to the standard deduction, changes to the child tax credit, new deductions that apply to everyday income, credits that are ending soon, and which tax rules are now permanent. By the end, you'll have a clear understanding of what applies to you and a simple action plan you can use right away. The standard deduction has increased again for all filing statuses. Whether you file single, head of household, or married filing jointly, you're seeing a higher deduction this year. There's also an additional $6,000 deduction available if you're age 65 or older and your income falls within the limits. This makes it especially important to understand your filing status and your adjusted gross income. If you have children under the age of 17, the child tax credit has increased to $2,200 per qualifying child and remains partially refundable. One important detail to remember is that your child must have a valid Social Security number issued before you file your return. That timing alone can determine whether you qualify for the credit. The state and local tax deduction, also known as SALT, has been adjusted. The maximum deduction is higher for married filers and lower for those filing separately, but there is a phase-out that begins once income exceeds $500,000. This change affects how much of your property taxes and state taxes you can deduct, especially if your income is on the higher end. Even if you don't itemize your deductions, you can now deduct charitable cash contributions above the line. That's up to $1,000 if you file single, or $2,000 if you file jointly. This means charitable giving can reduce your taxable income even when you take the standard deduction. This is one of the biggest changes in the new law. Certain types of income now qualify for new deductions, including tips, overtime pay, and interest on vehicle loans. These deductions do have income limits, but for many people, especially those earning wages or working multiple jobs, these deductions can significantly reduce taxable income. If you were thinking about purchasing an electric vehicle or making energy-efficient upgrades to your home, timing was critical. The electric vehicle credit expired in September of 2025, and energy-efficient home improvement credits ended at the end of the year. Anyone who waited too long may have missed out on these credits entirely. Education savings just became more flexible. Funds in 529 plans can now be used for tutoring, testing fees, dual enrollment programs, and certain therapy services for students with disabilities. This expansion allows education savings to better match real-life education expenses. Several tax provisions are now permanent. The higher standard deduction is here to stay, the qualified business income deduction remains in place, and the repeal of miscellaneous itemized deductions is no longer temporary. There's also a new $2,000 threshold for issuing Form 1099, which affects how income is reported going forward. Before you move on, take a moment to think about what actions make sense for you. Do your withholdings still align with your income? Are there deductions you should plan for before year end? Are there credits you need to act on soon? These decisions can make a real difference when it's time to file. To help you put everything we covered into action, we've created the 2025 Tax Law Action Planning Worksheet. It's designed to help you organize your information, identify opportunities, and prepare ahead of time so there are no surprises later. If you'd like help understanding how these tax changes apply to your personal situation, you're welcome to book a consultation using the link provided. Getting guidance early can help you make smarter decisions and avoid costly mistakes.